What's going on, everyone? What's going on, everyone? That's why I gotta listen to my producer sometimes. I am Jacob Sheep. This is the Tom O'Brien Show, of course. If you were watching Larry's show, I did a little bit of the last segment, kind of give you maybe some insight into what we're gonna talk about today. I hope you all are having a fantastic day. Of course, we are off tomorrow for Jimmy Carter's memorial. Man, these past few weeks, we just had very irregular weeks, obviously with the holidays and now this, but once we get past that, we start getting into the swing of the year. I think it'll be maybe a little bit easier, right? Let's take a look right now what we got going on in the market. Okay, so you have the SPY off about 0.05%. Quite an interesting day for this, right? So you're finishing a little bit lower. I believe this opened around like 590, okay? Anytime you get some movement up, right, you're getting suppressed all the way back down. Crawl, back down, up, back down. Now, what is nicer is that it is on the daily, at least, making lower lows on that time frame, which is all right. We're consolidating right now around that 589, in between 589 and 588. With the composite doing a little bit worse, you're off about 0.17% at 19,455. You get that Dow Jones Industrial actually flat a little bit to the green right now at 42,526. Again, same kind of consolidation pattern rocking there. You have the Russell futures off about 0.66% at 2,249. You have the E-mini as well, trading at 5,949. Okay, those are the futures there. You have the dollar up 0.44% at 109.07. And then crude oil off about 1.1% at 73.43. You got that gold contract trading up 0.41% today, doing actually quite well, all things considered. Now, middle of the day, you get this little kind of sell-off here, but, we're trading 2,675 away from 2,687. Again, I was joined by Tim Ord of the Ord Oracle yesterday. Obviously, he will not be with us tomorrow since we are off. But he had a nice little insight on gold and potentially where it is headed. Over the past year, there has just been no attraction in the gold market. Risk assets were very huge. I mean, equities massive, right? And you still have so much cash sitting on the sidelines that's just not being deployed. So the kind of idea was, why on earth get into gold right now? And we might see some kind of sector change, right? I mean, let's say you actually do get some pretty bad economic downturn that goes on, right? Which all we need really, with these high, increasing yields that we have. I mean, what are we trading at? You have the 10-year trading at 468 right now. You have the 20-year at 498, 30-year roughly the same, 492. I mean, you're getting some increase in the bonds, okay, in the yields. And that is definitely going to suppress some stuff, right? I mean, you start talking about this kind of idea, like if the Fed starts speaking on potentially raising at least the Fed funds rate, which I really am in the camp of that is going to happen, right? You have a very weird kind of situation going on right now. You have inflation still relatively strong, right? You have yields surging in this way. But additionally, we're going to talk about a merger and acquisition that just occurred recently with Fubo. We're going to look into Fubo. John Belaya asked in the Den, and John Belaya, you're 100% right. Like, Fubo is a very interesting kind of equity. And I don't know if you guys remember when I was filling in for Tom, I think it would have been the end of 2023, and I actually got a subscriber question. Someone emailed me to take a look at Fubo. I think the thing was trading 119, and I'm taking a look at it, and it's I don't see where the growth is. Their expenses are very high. They make okay money, revenue, but their expenses are extraordinarily high, and it looks like that might change. We're gonna talk about that, but. You have a lot of inflationary things occurring and then a lot of stuff that's trying to prevent that from happening. I think that if we get one bit of bad data going forward here and the conversation starts leaning towards maybe we need to raise interest rates, these equities have way, way, way more to go, right? You've seen in 22 and 23 when you get some of these yield spikes, I mean, the equities get clobbered, right? And of course they, recover and everything like that, but you haven't necessarily seen that, right? I mean, we're talking this is devastating because in a sense, this is just a change in behavior than what we've been seeing in the market, right? But again, as I was saying when I was filling in for Larry at the end there, I mean, we're trading just back into the middle of November, which was the end. Well, I mean, you still had some to go up in December, but I mean, we're trading right around there. Yeah. I mean, right around this gap up is where we're at. You get a great floor at 580. You know, you get the SPY coming back down, probably wants to test that 580 again. If it does reject it on okay volume, you know, you most likely get some consolidation until things become more clear of what the Trump effect is going to be, what our inflation numbers are going to be like, just economic data in general. So that's kind of the range I anticipate the SPY trading in for quite a while, is just between the 600 and 580. Much more attracted, I believe, to that 580 level. Again, you know, we had Tim Ord on, as I was saying just a moment ago, and he was looking at it, you know, if this breaks this kind of level, 575 is kind of the place you want to go. But all things considered, you know, the SPY is not getting really slaughtered or anything, right? I mean, you make an all-time high after consistently making all-time highs. And of course, you need some level of breathing for it, right? A little bit of a digestion. We say this all the time, right? Stock makes an all-time high. You know, it's one of the reasons you don't FOMO, at least on specific equities, right? Because it needs to figure out and reestablish a base, right? So, as far as all this is concerned, I think we probably stay around these levels in the SPY, right? This is going to be big movements essentially on economic data and what the Fed decides to do. I think there is the potential, again, for a lot of equity movement to the upside this year. It's very weird. I think the laxed kind of regulations from Trump, I think lower corporate tax rates, I think, again, this potential for a massive cash infusion from all the dry powder, quote unquote, that exists. We were talking like it's $9 trillion that I had anticipated was going to enter the market last year. And in fact, it didn't. So it still exists there. And so when you get this kind of laxing of basically operations or barriers to operation, you know, that's when you can start to see money flowing into these equities. But again, that is very much tempered by the potential for increased inflation and the Fed clamping things down. Maybe we should have gone Volcker, you know, 2 years ago, got it over with, and continue to go up, because things get very freaky. And this is a lesson in all of life. When you try to very hyper micromanage everything, it can get weird, and maybe the Fed's doing that. I'm not sure. I'm teaching that from lessons that I've learned myself from making those mistakes. Folks, stay right there. We'll be right back.